Hello, everyone. This is Dave. Thank you so much for tuning in. As always, hope you're having a good day despite the red day for Rocket Lab stock. For me, it's freezing here and we've gotten an insane amount of snow, so it's been pretty rough, but hopefully you're having a better time where you are. Today, we're going to take a quick look at a couple conferences Rocket Lab's CFO, Adam Spice, did attend and speak at, see what we can learn about the company's progress and if there's anything important for our investment thesis. This will be my first time listening to these, so you'll get my initial unvarnished impressions and thoughts. I always reserve the right to change my mind about pretty much anything later on, and maybe you can share comments down below and change my mind about things as well. Let me know your thoughts on what's said. These will just be a few highlights. I definitely don't want to just go resharing the entire recordings. So if you want to check out the original full recordings, I'll share those links in the description down below, or you can check out Rocket Lab's investor relations webpage. They're usually pretty good about sharing these things. Before we dive in though, I hope you will consider hitting that subscribe button if you haven't already subscribed, because every new subscriber really helps out so much for the channel. And to my current subscribers, thank you so much, as well as the channel members supporting every week. You guys are the best. Okay, with that out of the way, let's dive into what Rocket Lab's CFO said at these recent conferences. Okay, our first one here is the TD Cowen conference. Let's go ahead and dive right in. It's audio only, unfortunately, so we don't have a lot of graphics or video to go with it.
Neutron I talked about briefly. It really, again, we think addresses what we see as a monopoly today that SpaceX has, that medium launch category. It was kind of a monopoly that was created out of performance, because certainly, it's hard to knock SpaceX. They've done amazing things. And I think the commercial and government customers are certainly grateful that that capacity exists. But there are a lot of customers that would very much prefer not to put their spacecraft in the hands of an arch competitor. And so we think that's important, and also the fact that the U.S. government customer just needs diversity of supply. So we think Neutron is the right vehicle. It's really kind of a very modern vehicle compared to even the Falcon 9. When you look at the carbon composite materials for the tanks and structures and the engine architectures, we're really kind of bringing the latest and greatest to market embodied in Neutron.
Yeah, I think that was a very interesting, concise way of basically explaining the argument for Neutron. If anyone is new to the company and wondering why it needs to exist when Falcon 9 is out there, well, we don't want any monopolies, and it is bringing some new technology to the table. I do think that Falcon 9 can continue to be a successful rocket where Neutron is operating, and we need a marketplace with multiple competitors for, I think, pretty obvious reasons.
We also build full spacecraft solutions. So the first one that we did at scale was with Globalstar MDA. So we built the satellite buses for that program, and those are coming off the production line as we speak, and they'll be teed up for launch relatively soon. And then we followed that on with a large contract with the DoD to win a Tranche 2 beta award for the SDA program. And so we went from our first contract award of about $150 million to a second award, which was over $500 million. And we have a lot of other programs as well that are more kind of small bespoke programs, including 2 satellites that we manufactured last year that will ultimately orbit Mars to do some scientific research for NASA. Now, people would say, well, why are you building spacecraft for other people? And I would say that, look, there's clearly there's the financial kind of attributes of that. We're generating cash flow and just scaling up the business. But all the programs that we've elected to take on in our Space Systems group have all been about building our IP portfolio. Because as I mentioned earlier, the real strategy here is ultimately owning our own assets on orbit. So we really kind of go with what we call teaching customers, where we don't take a program that's not going to allow us to create new capabilities really at our customer's cost. So we think it's a capital effective and just a better way to do it than just kind of do a kind of a field of dreams approach. But we really work with the customer, develop technology, bring it to market. Now we own that technology. We use it for our own benefit down the road.
Yeah, I'd say that's a great point and underappreciated. A lot of the customers they take, or most of them, it's always like some kind of new project that they haven't done before, and they're learning something with it. So I think if you're looking for what they are trying to become and the satellites that they want to make in the future, you can look at the kind of things that they're making for other people. Not a lot of Earth observation, right? So I don't think it's going to be Earth observation. They are doing kind of communications stuff for the SDA. Obviously, their satellite buses for Globalstar are for Apple's emergency SOS texting feature. So that's direct to device as well. I know Peter Beck said previously that communications is a tough place to be in terms of internet and direct to device, but I wouldn't count it out yet necessarily. And I think a lot of the capabilities they've built really work well for that application. Although, they're not done yet. They still need some payload capabilities and other things, like they're subcontracting significant pieces of their SDA deal to Redwire and Celsium Astro and a bunch of others, Moneric. Anyway.
We have multiple variants of our satellite platforms. You can see we go from small satellites that launch on Electron to much larger ones that will launch on Neutron and that currently launch on other vehicles like the Falcon 9 and so forth. So we have a broad array of spacecraft. We're incredibly vertically integrated. If you look at a Rocket Lab spacecraft solution, it's probably 70%. If you look at the satellite bus, it's probably 70% internally manufactured with all the subsystems. And we think that's super important because if you don't have that vertical integration, you can't control cost and schedule, which typically are the boogeyman of space programs. But the one thing that we've currently stopped shy of, and we've talked about this before, about being kind of our next endeavor, is really the payload side. So what we've done is we've focused on all the key elements of the satellite bus, and then the next step will really be adding payload capabilities so that we can bring the full solution to the customer, but also bring the full solution to our own internal needs as well for our own application aspirations.
Yeah, we've been waiting on that for a while. To be honest, I thought something might have happened on that front by now, and they did have that capital raise. They said a lot of the money might go to acquisitions for payload capability. We haven't seen anything yet, though, so I'm getting a little antsy on that one.
Now, our margin model for that business is we think that Electron can be when we're launching twice a month, and we're not quite at that rate yet, but based on again 10 to 16 to a number this year that hopefully looks like something north of 20 launches per year, you start to get that in focus where you get to be in the 40 to 45% gross margin range. Very little R&D, if any, really for Electron at this point. So you can kind of imagine it gets to be a pretty nice kind of contribution margin looking business. Neutron's going to take a few years to get there because it's just at the beginning of that process. But also Neutron's quite different in the fact that it was designed from day one to be a reusable launch vehicle versus Electron that we've been backing our way into reusability. So I would say that the end result is we think that Neutron can be a 50% gross margin business and have a lot of the same characteristics as Electron. And again, this is not a let's see what happens. I mean, again, we've launched 59 times. We've got a lot of infrastructure. We understand what it costs to bring a rocket program and maintain that rocket program. So we think pushing 50 points of margin, mid-20s to upper 20s contribution margin for those, I think is probably the right way to think about it. But it'll take a few years for Neutron to get there. But we're pretty close to getting there with Electron as it is.
Got it. And
okay, so some interesting info there. Some stuff we've heard before, but obviously a lot of us are wondering how many Electron launches they're going to have in 2025, and we're thinking they may provide a bit more guidance for that in the upcoming earnings call in just about a week. So I've been hoping that they will guide for at least 20. Obviously, we had 16 in this past year, so I really would like at least 20, hopefully 22 or more. And we did get that confirmation that, it's looking like at least 20. Hopefully we get some more firm details later on and just some good info there on Neutron margins and timeline as well. The other interesting tidbit about Electron R&D is that if you think the reusability program for Electron still ongoing, you'd think there'd be some R&D there because that's obviously not fully complete. They've never reused an Electron yet. Sounds like there's very little of that going on, though. Maybe just another indication that Electron reusability is just really not a priority at this point, and maybe they circle back to it after Neutron's done. Maybe they don't. It'll be interesting to see what happens there. I've kind of gotten a bit more tepid on the impact of Electron reusability over the past year. It's just not as impactful with a small rocket as with a big rocket.
I think the reason why we're so, I'd say, consistent in our belief of not discounting is because this business is a really difficult one to execute in. And what you found across the landscape is a lack of execution in general. So competitors can put crazy pricing like we've seen in the past. Some of those competitors are no longer around. And once that shadow kind of pricing lifts because people realize, well, oh, yeah, you can put anything you want on a slide, but actually to deliver a rocket to a pad on a consistent basis that doesn't blow up every time, it's a different thing. And so we've actually seen pricing increase. So if you look, when we started marketing Electron, it was a 4.9.
Yeah, I mean, if anyone's been around long enough to remember Astra and the low prices they were claiming that they would be able to operate at. Obviously, they're still trying with their Rocket 4 now as a private company, but I mean, I don't.
So I would say that we see that to be strong. I think probably one of the strongest growing parts of our business is actually the HASTE variant of Electron that I showed earlier, which is doing hypersonics test development work for the DoD. And that will continue to be a big growth driver, we think, for our Electron business going forward. So we see really nothing but strength. And people ask the question, well, are you concerned about, kind of the potential DOGE effect of, the new administration going through the Defense Department? We actually think that bodes well for us because, we're not that traditional stodgy prime contractor cost plus. I mean, we go in with aggressive firm fixed price, opportunities that really bring a lot of value to the government customer, and we move very, very quickly.
Yeah, I'm actually very bullish on HASTE as well right now. I think the Kratos deal sounds quite big. That whole Iron Dome project sounds like there could have some work headed Rocket Lab's way, and there's talk of integrating the SDA into that already. And I think it's not inconceivable at some point down the line, there's more HASTE launches in a year than orbital launches. There's a long way to go to get there, but a lot of potential growth coming from that HASTE business. Obviously, average selling price still $10 million, and that's 1/5 of a Neutron. So Neutron, very much more important and in the focus, but HASTE, not to be ignored either.
Very, very see Sierra Space and so forth. So I think it does represent a huge growth opportunity for the non-traditional, kind of players there. Now, I think that's come with its own challenges, right? There's been some supply chain challenges. If you go back, a year and a half ago, the big challenge in that market was electric propulsion, right? And that problem seems to largely been solved. And then that problem moved into optical terminals, right? So the optical terminals now are the problem. So I think it's just part of the growing pains of introducing kind of younger companies and newer technologies into a market that traditionally moves pretty slowly, and the customer, in this case the government, is trying to move very, very quickly. But overall, I think we step back. I think it seems to be a great opportunity. We're excited about Tranche 3. I mean, we're going to be throwing our hat in the ring in a very, very aggressive way for that as well. So we think it's a...
Love to hear it. Tranche 3 could be massive. I mean, obviously they're making over 500 million, $500 million on Tranche 2, and they're going to be aggressive on Tranche 3. The opportunity could be even bigger there. Really excited for that competition, which I think the bids are due like this year, if I'm not mistaken. I have to double check on the deadlines on that. It's something I've been keeping my eye on.
It's a very, very attractive long-term growth opportunity for us and hopefully a lot of other smaller players in the market.
Got it. And remind us when Tranche 3, is that an RFP later this year?
Yeah.
Okay.
So you should start to see indications. I think the award dates are going to be sometime in late Q2 or early Q3.
Got it.
There you go. He answered it for me. Late 2Q or early Q3 or in late Q2 is probably when you're going to see the awards.
But to us, that just paves the way to owning your own assets in orbit. That's that much larger recurring revenue opportunity. And if you have a rocket and you have the ability to design and build spacecraft and operate them on orbit, you've got all the pieces that you need. Now, you still may not, there's other elements you need to pull together, like spectrum in some cases, right? If you're doing a comms platform, you need to have those end customer relationships, even if you're like a remote sensing customer. So this is one where we think ultimately it's probably going to be a combination of organic and partnerships and acquisitions that get us there. But if you're a satellite constellation.
Yeah, fascinating. Sorry to interrupt there, but yeah, just him mentioning spectrum again, that makes you think potential communications, obviously, perhaps internet or broadband, could be something else, but internet is really the biggest, and talking partnerships and collaborations, acquisitions. So it's going to be fascinating over the next few years how this really shapes up.
It's going to be a pretty daunting place to be. I mean, if you kind of think of how some of those traditional satellite operators are thinking and feeling, looking at Starlink and looking at SpaceX as their competitor, I'm not sure they know what their next move is, because they're getting outdistanced on the ability to put assets on orbit really, really quickly at a very, very reduced cost point. So I think that, we think you have to have that full solution. And so that's where 5 years from now, I think you're going to see Rocket Lab, you're going to see, Electron still launching and growing. You're going to see a healthy merchant business that feeds off of the overall growth in the ecosystem and kind of that rising tide raising all ships. But then you're also going to see us with our own assets and owning applications that, that are going to be advantaged by the fact that we can put satellites up very, very quickly and very cost effectively with Neutron.
Great. Looking forward to it. Well, we're out of time, but thank you so much, Adam, for support.
Okay, so that was it for the first conference. That was TD's Cowen. Again, making sure not to share the whole thing because I think, they don't want it being reshared completely. I think it's okay, though, since I'm just sharing some clips as well as commentary and discussion about them. So it's not just like a re-recording and republishing. At least that's my stance on it. Okay, so let's now go to Citi's Global Industrial Tech and Mobility Conference. This one from today, actually, and sounds like it's going to be interesting as well. Let's check.
But we are the second most frequently launched vehicle in the Western world. So we launched 16 times last year. The prior year was 10, so we've gone from like 10 to 16 to this year. We've got a manifest that supports well over 20 launches. Our ability to deliver against that manifest.
Okay, that is even more good info. So I think previous conference, he said hopefully over 20, and this wording seemed a little bit more confident, a little bit more firm to me. He said manifest supports well over 20 launches. I think that's a great sign. Obviously, the manifest does not always materialize when those customers are late. If you've been around a while, you've seen every year they generally miss their target for launch numbers, not through their own fault, but through the customer not being ready. So good sign. We'll have to wait and see what that manifest actually turns into with customers ready to go to the pad.
So we've said that the vehicle, that the goal is to launch no earlier than middle of the year. We kind of put that as our no earlier than, but that's also our target date to get the vehicle to the pad. A lot of things have to go right in order for that schedule to work. And so far things have gone well, but it only takes one thing in a rocket program to set you off course. We saw last year when ULA was bringing Vulcan to market, they had an issue with their Centaur upper stage, blew up on the test stand, caused them a 6-month delay. So you just never know. You start every day thinking that, or planning that you're not going to have a fire in your test stand, you're not going to blow up a tank and so forth, but this is a rocket after all. So right now, green light schedules have us, still sticking to the schedule that we've communicated, but it's a rocket program. When you look at the demand environment,
I don't know about that. That was kind of the phrasing we were hearing last time around last year before we heard a delay. Started to say things like, oh, it's a green light schedule. If everything goes perfectly, we could still launch by the end of the year. Ultimately, they did change it to, about a 6-month delay or mid the following year. It doesn't sound quite as confident. He said things have been going well, but I don't know if I'm getting the full confidence that they'll actually launch in terms of mid 2025. Maybe they'll have it to the pad mid 2025, and then there'll be some testing and getting ready and all that kind of stuff, and then later 2025 they actually launch. But let me know what you think, as always.
and we worry about a lot of things, including things blowing up. We really don't worry about demand. I mean, there's such a scarcity in the market right now for that medium lift capability. If you think about the fact that there's a lot of customers who are in very uncomfortable positions, whether the U.S. government and they don't have choice, right? And they need to have choice for national security reasons. If you're a constellation operator that competes with Starlink, you're very uncomfortable launching on your competitor's platform. So the combination of the government, the commercial markets, all needing the capacity, and really we think right now, kind of real other viable competing medium class launch vehicles coming to market create a really unique opportunity for Neutron. The dance that you do.
That's an interesting thing to say. No really viable other medium class launch vehicles coming to market. I can see them saying that about Relativity. A little bit surprised they would say that about Firefly's MLV. Let me know what you guys think.
Scale to the 130 launches per year, that really got triggered by reusability, because then you go out of making a booster for every single mission to now you have a fleet, and that supercharges your financials too. Your margins expand very quickly because now you're amortizing that biggest expensive booster over multiple launches versus expending them. So that's kind of the current kind of plan of record for us to go out and kind of bring this vehicle to market and hopefully get to reusability as soon as possible, because that also lessens the capital demands on the business, because we don't have to kind of every time you put a booster in the water, that's going to be you'll hear me crying from Long Beach. Right, every time that happens. So hopefully it only happens one time. We'll see. More and more, we're signing multi-launch deals that span multiple years. And so exiting Q3, and we'll have our earnings call next week where we talk more about backlog for Q4. But we exited Q3 with 39 Electron launches in backlog, and we've continued to sign up more customers. So the demand environment for that product is very strong as well. And like I said, probably 60% of that is Earth observation in one way, shape, or form, whether it's SAR,
Good to get that granularity. So 39 launches in the Electron backlog that's exiting Q3. So obviously Q4 is long done now, and we're going to get that earnings call soon. 60% Earth observation makes a lot of sense. I guess Kimmy's would be an outlier there with their IoT satellites.
HASTE hypersonics test is probably the fastest growing part of that Electron family of small dedicated launch, and that's where we work with our U.S. government's prime suppliers to provide the launch capacity into those hypersonics tests. And what we've been able to bring to that market was, previously you'd see them typically launch those on a Minotaur from Northrop. Cost of those would be 3 to 4, maybe 5 times the cost that they'd be charged for Electron, and their cadence was much lower, so they could offer those maybe a couple times a year. So the programs were infrequent, they were expensive, and now we've been able to offer up. Look, if the government customers want to launch monthly or greater for HASTE, we could certainly support that, which is kind of new to the market at a cost point that's not been available before. So I think everybody is pretty much in agreement that our national security would benefit from more hypersonics development faster. So we're kind of addressing that pretty significant strategic need for national security on that front, and it's growing very, very quickly.
And the tests that are being conducted, are they to test out offensive capabilities, defensive capabilities, both?
We can't get into the details of those for lots of different reasons, but we're not developing offensive kinetic weaponry.
Yeah. Okay, great. And then let's do the same exercise on what you view, or your customer set today for Neutron that have signed up. Any disclosure you can make?
Yeah, good to get that confirmation just for, there was even a recent article today, people get angry about Rocket Lab being involved in anything defense related. And it's just kind of the reality of the aerospace industry is government defense is still the biggest customer, although Starlink is kind of changing that. But at least it's not offensive, right? You're just defending yourself and building out those capabilities. And I don't think we'll ever see an Electron launching a weapon at a ground-based target ever. Yeah.
Look, the biggest part of the space applications market, really, at least on the commercial side, is comms.
Yeah.
So I think the majority of what we'd expect to launch on Neutron is going to be on the commercial side will be communications related. So you can think about,
There's some non-Starlink.
Non-Starlink, yeah. And there's some significant constellations that are being developed, and satellites are being built as we speak. And those are kind of known. Those are like Amazon Kuiper, and you've got Telesat Lightspeed, and you've got got OneWeb, you've got all kinds of different opportunities. But then on the government side, there's a lot of like we're building SDA satellites right now for Tranche 2. So SDA is building hundreds of satellites, ultimately probably thousands of satellites that are going to need launch that will ultimately be procured under the NSSL launch procurement program, of which we're getting onboarded this year for Neutron. So I think Neutron's going to be a very
love to hear him sound so confident about getting onboarded this year. Like, as far as I was aware, that was still an open question. And he just said like, oh yeah, foregone conclusion, we're getting onboarded. So if they do get onboarded, that's amazing. And good sign for the future. They definitely should be at some point. I fully expect them to be. I just didn't think it was a sure thing this time around yet.
So all of those things have kind of breadcrumbed us to have a pretty vertically integrated platform. And again, we continue to see that as really the path going forward. So if you look at those various businesses, you've got our merchant component business, it's kind of one of those businesses that grows with the overall ecosystem. We've got really good market share there because of our heritage. But think of that as roughly a 20% kind of CAGR associated with it. The platform business has been growing from a smaller base and growing faster, now equal size to the subsystem, and growing probably in the 25 to 30% CAGR range. And of course,
by the way, guys, anyone out there building their own DCF should absolutely be writing down these numbers. 20% CAGR there for merchant component business. And these are numbers that are quite important as you try to figure out how much the revenue growth of the overall business is going to be, over the next several years in the future.
And once we get past this first launch, R&D drops pretty precipitously. It doesn't go away. It'll stick around for probably 3 years as you go through these annual block upgrades, but it'll be done at a vastly reduced R&D burn. And then a lot of those R&D resources actually pivot over into production, where you've got now air cover from revenue and all the goodness that comes with that. So if you look at the margin profile of our launch business, Electron, when we're launching a little over 1 per month, which was around for probably 3 years as you go through these annual block upgrades, but
that's interesting. So sounds like block upgrades will be on an annual basis for the next 3-ish years, so we can expect those changes and look forward to them.
If you look at the margin profile of our launch business, Electron, when we're launching a little over 1 per month, which was last year, that gives you gross margins in the low 30s with a path to mid 40s to maybe a little bit better than that when we're launching twice a month. Right. So I mentioned earlier, we've got a manifest that supports, well north of 20 launches. So I think that we have line of sight for that. And that is really, you don't really get a lot of BOM cost reductions and labor reductions in a product where you're only making dozens per year. But what you do get is you get to amortize that pretty significant overhead across greater number of units. And that's really what drives your margin expansion. So I think we've got, that's really pretty easy to model. Neutron is going to look a lot like Electron. It's going to take, a period of time to really just build cadence more than anything else, right? And so it's cadence, just like it was in Electron, but it's also reusability. So sticking that early landing is super important because again, every time we put a Neutron in the water, it's tens of millions of dollars, right? So we want to do that as few times as possible. And then it's just all about getting to, once we can get to, roughly a launch per month-ish of Neutron, we should be at our target of 50 points of margin on that business as well.
Right.
Now,
that's great, guys. So Electron takes basically 24 launches per year to get to, call it maybe 44% margin, gross margin that is. And Neutron would be 12 launches, 50% gross margin. And obviously the numbers are a lot bigger. So the underlying gross profits bigger as well. So that's pretty exciting. We kind of had an idea of they would be able to get to higher gross margin numbers with a fewer number of launches because of that, but good to have that confirmed now. And again, great info for anyone out there who wants to build their own discounted cash flow model, which I always do recommend.
Now, there's opportunities to do better than that. I think we always kind of, we set ourselves some pretty high internal bars, and we try to set the bar externally fairly low. So
Right.
And then on the space systems business, that's a bit.
That's another interesting point there is that they set themselves a high bar internally and the external bar low. So there's always opportunities to beat what they kind of tell people they're aiming for, which is obviously great for the company and the stock when that happens. So could be opportunities for even beating that and that margin number for Neutron in the future, especially once they start getting beyond 12 launches per year, which seems quite reasonable to me to go beyond 12 per year.
So today we're doing Electron, we're spending a bunch of money on Neutron, we get up in cadence, and R&D fades away, we get to EBITDA profitability in those two businesses. But then do we go into a new investment cycle, do you think?
Well, I think if you look at the cost to build a constellation business from scratch, it's it takes a long time and it's very expensive. We can only imagine what Elon is spending at SpaceX on that, and Starlink.
Well, a lot of these people probably know because they're investors in SpaceX, but yeah.
So I think it's more likely that we leverage our capabilities in launch and building spacecraft at scale in a very vertically integrated way to partner or maybe even acquire our way into that constellation business initially. Now, Pete's a pretty creative guy, and he's always looking at kind of building a better mousetrap and addressing kind of markets in a different way. But I think that's probably kind of longer term if you think about pure greenfield opportunities, because there's people out there, or I say people.
Interesting, again, the talk of partnering and acquisitions. So obviously, if a company's too big, they can't really acquire it, but partnerships where maybe someone brings spectrum to the table and other capabilities, always very interesting.
There are people that that are constellation operators that have things that are difficult to acquire, like spectrum. And customer relationships, but we're completely being muscled by SpaceX's ownership of a vehicle and their ability to build spacecraft at scale, because they're now the world's largest spacecraft manufacturer, as well as being the world's most dominant launch company. So by bringing Neutron to market, we level that playing field. And I think, again, we have the ability to do very much what SpaceX is doing with Starlink, but do it in a slightly different way. Probably not going after a market that requires 40,000 satellites, because that requires, raising capital that we probably can't do, practically speaking. So we're going to be very careful and targeted about what we go after, leveraging what maybe other people bring to the table and what we can augment that with. I think if you're kind of look over the next 3 to 5 years, I think what you're going to find is we're going to be taking on more and more customer programs that teach us how to build what we know we're going to need in the future. So we've kind of looked at all of our satellite engagements, whether it's a NASA program, whether it's the MDA Global Star, whether it's SDA and other things that we've got in the works. Those are things that we would have had to have developed on our own. So rather than basically do a tremendous amount of R&D burn without any support, we have customers pay for that. They're basically teaching customers in a lot of ways. So I think we'll continue that. So I don't anticipate that we would do another Neutron-like heavy CapEx and R&D crusade. Probably the best way to put it, these projects. But I think it's going to be a little bit more evolutionary once we get Neutron to the pad versus revolutionary.
Right.
That's good to hear. So hopefully they can maintain that profitability once they do hit it. And then we're not looking at another massive, R&D cash burn cycle, and the profitability is just a short-term thing.
So I think the cash burn going forward is a function of how quickly and how much do those other businesses contribute to offset Neutron as we get that scaled. We exited Q3 with over $500 million of liquidity. We feel good about that, but we also understand it's a rocket business, and I think if we were to drop below some. The thresholds are kind of arbitrary. A lot of it is based on our historical experience with customers when they start to wiggle when you don't have a certain amount of cash, because these programs, like nothing is less than a 3 to 5 year program in this business, right? So they want to know you've got the financial wherewithal to be there. So I'd say if we were to had line of sight to dropping below 300 million of liquidity, that's probably where we'd want to think about kind of going back and make sure that the coffers are well topped up. And that can be a function of not necessarily, I think people.
That's interesting. We haven't really heard them talk about raising even more capital for quite a while. I was kind of hoping they wouldn't have to do that. Obviously, it depends on what kind of acquisitions they want to make. Obviously, for the right acquisition, it could very much be worth it and fit in terms of, the whole being more than the sum of the parts type thing. But yeah, sounds like, more capital raises could be potentially on the table in the future if we see that balance drop below 300 million. So another number to keep in mind there.
Well, sometimes. And that's where I think the biggest part of the business can be. So I think if you look 5 years from now, I think the mix is going to be increasingly disproportionate towards that services side of the business. But everything is necessary to get there. A lot of people will try to say, well, how much of SpaceX's $355 billion private market valuation is tied to the launch business versus Starlink? I don't know. If they didn't have a reusable rocket that nobody said could be achievable, then Starlink wouldn't be viable because the cost per bit wouldn't close to compete with terrestrial services, right? So that's why you really have to step back and look at it from a very strategic long-term perspective and say, what are all the pieces you need to have? And fortunately, the hardest piece is where we started. Like, I don't think we've never really seen a satellite company back their way into a rocket, but we've seen rocket companies work their way into satellites, right? So I think that once you have that hardest piece of the puzzle solved, the world becomes a much, much bigger place for you to kind of go look for opportunities.
I like that. They're almost achieving the hardest piece. They've got a lot of expertise there. And yeah, he's right. You don't usually see satellite companies go into rockets. You see rocket companies go into satellites, at least in the recent future or in the recent past.
And I also think that people they see a valuation of, say, 355 billion for SpaceX, and some people talking if it goes public at a much, much larger number. And then, what should the real credible number 2 fast chasing competitor to SpaceX be worth? If you kind of step back and look over what can we accomplish for the next 10 years, how can we narrow that gap? As we narrow the gap in capabilities, what does that relate as far as closing the valuation gap as well, right? And I think when we were trading for $2-3 billion, and SpaceX was rumored to be trading for 355. It was pretty a no-brainer. But I think as they continue to expand and they show the value that they create in space, I think it creates a very similar opportunity, but much more actionable on our part than maybe some others.
Okay, perfect. Thank you, Adam. Really appreciate it.
Thanks, Jason.
Thanks, everybody.
Yeah, he kind of laid out the thesis a little bit there in terms of why Rocket Lab could be a great investment. And couldn't have said it better myself. It's kind of what I've been preaching for quite a while and why I've been holding it. Great stuff. Okay, there was a lot there. To wrap up, do let me know what you thought was the most important. I thought there was lots of interesting tidbits. I still am kind of leaning towards maybe a slight Neutron delay. Don't kill me, guys. That's just my guess. But things are sounding pretty good overall, really. And I think Adam sounds pretty confident. Sounds like maybe another capital raise is possible, which is not something I think was on a lot of our radar right now. So how do you feel about that? How do you feel about this potential he's talking about for partnerships? What kind of companies do you think they could partner with down the line? Are we talking AST, Globalstar, traditional telecom, someone else who has spectrum? Always interested to hear your thoughts. And I think, yeah, things are very bullish for Haste. Electron's looking good. The margin profile for Neutron looks strong. They can get to higher gross margin than Electron in half the number of launches. So that's very exciting. Things are looking interesting. Let me know what you thought down below. And once again, if you're not already a subscriber, I hope you will consider doing that by clicking that subscribe button down below. I will very shortly be bringing you my Q4 earnings preview video, as well as live streaming that Q4 results call as well, and giving you my thoughts on it. Hope you guys have a great evening and great rest of the week. I will see you soon for the next video. Bye for now.